breaker blocks are one of the most misused ICT concepts out there right now. And you're probably making the same mistakes as the other 90% of the traders trading this strategy. Calm down, I've got you covered. I've made just over $700,000 in my career trading ICT concepts, and today I'm going to be busting all the myths regarding this one topic once and for all. This is my full, no-fluff guide on understanding ICT breaker blocks. After watching this video, you'll not only get a clear understanding on how breaker blocks work, but an actionable strategy that you can copy and paste and implement into your trading right now. So the first thing we're going to cover is a bullish breaker block. Now, what is a bullish breaker block? What is it composed of? Because there's a lot of things in this video that I want to cover that isn't just breaker blocks, right? Breaker blocks is just the concept. We have to understand, when should we be using them? When do we know that they're actually valid? There's so much more that people don't talk about. It's not just a breaker block, right? If we were to just trade a breaker block like this pattern, we would be considered pattern traders, right? Without context as to why this pattern will work, there's really no reason to be trading it, right? You won't be successful. And that's why so many people that initially learn ICT concepts, they'll see a fair value gap or they'll see a breaker block and they're just going to take a random trade without any context. And then they wonder why the concepts don't work. It's because they're not applying any context. So in this video, I want to go over first what the actual breaker block is, what is it, and how we can then spot it in the charts and actually understand the context as to when they work, when they don't work. So first thing, what is a bullish breaker block? Now, a bullish breaker block is going to be composed of four main parts, right? We're going to have a low that gets put in, a retracement to create a high, then going to make a lower low, and then umming all the way back up to make a higher high before coming down to retest this up close candle in this move here, and then continuing higher, hopefully towards whatever the draw on liquidity is, and that's when we'll get into the more context side of things. But main thing, just in this part, I want you to understand it's composed of four things: a low, high, lower, higher high, and in a bearish breaker block, it is the same thing, except it is a high, low, higher high, lower low. So let's jump into the charts. Let's look at some examples and let's cover the actual context as to why they work. So what we're looking at here is NASDAQ, and what we're looking at is this accumulation range. We have equal highs up here acting as buy side. We have sell side here. Now, for me to take a trade, I want to see one of the opposing liquidity pools get taken. A lot of the times people are going to be continuing to trade in this range and just get chopped back and forth, when in reality, we want to be waiting for an opposing liquidity pool to be taken. So here we go. We have sell side now taken. So what do we want to see, right? We want to see a low get put in and then a lower low, right? So here we are. Let me get out of full screen here. We have a low that gets put in. We want to see a lower low. This is now our high. So we can put a low and a high in. We're looking for now a lower low to be put in. We now put in a lower low. And now I want to see displacement, right, up through this high to now create a higher high. Now, keep in mind, the whole point in which we are watching this play out is because sell side has been taken, right? A breaker block is valid when we have a reason for price to go higher. What is the reason for price to go higher? Well, in this specific example, we can see all of this generated buy-side liquidity that we've left along the way, right? So we want to see price come up and run all of this liquidity. Now, if you don't understand or not new, I'm going to leave some videos in the description, because there's a lot of things that you need to understand that can correlate with breaker blocks, right? It's putting them all together. For example, buy side of the curve, right? This being buy side of the curve. If you don't know what that means, take a moment and go watch this video right here. I'm going to put somewhere on the screen, market maker models. Go watch the market maker model video and then come back here and watch the breaker block video. So now that we have a new higher high put in, this now becomes our breaker, right? This up closed candle that we create from the high gets pulled over. And as you can see, this fair value gap right here as well is overlapped with this breaker. Now, this is what we call a unicorn, right? A unicorn is a fair value gap that is aligned with a breaker. It is a fair value gap and a breaker. So if we go back to this model that we have, there would also be a breaker or a fair value gap. Now, if we were to look back at this model, this is what a unicorn would look like, right? It is a fair value gap after the big displacement move aligned with this breaker, right? This is a higher chance and a higher probability that this area is going to bounce and we're going to continue towards the upside. So looking back at this is where we would be looking to possibly take an entry. Fair value gap, you would put your low at this recent, or put your stop at this recent low. what it would be targeting. We'd be targeting buy side liquidity. We then get displacement move to the upside before pulling back into the breaker. This is when you could possibly have another entry as well. And if you actually look, and if we were to zoom in here, you can actually see the exact same thing forming. Low gets put in, high, lower low, displacement, and another breaker. Now, price is completely fractal, meaning every single thing that you see on every time frame will be in correlation with a model, meaning every setup and everything and every concept that you look at can be on a 1 minute, a 5 minute, a 1 hour, whatever it is constantly repeating itself. So there's multiple entries that you can be taking here. If we zoom out, this is a breaker, right? This is buy side of the curve going up to go take out buy side liquidity. Now, when market pulls back into this breaker, let's say you didn't get this entry, right? You then zoom in and you look for the exact same thing in an area in which we expect to reject, right? If we were to zoom out and you actually understand why I picked this specific example and why this is the trade that we should be taking, is because we're in an area in which we expect to reject on a bigger time frame. If we zoom out to the 1 hour, or if we zoom out to the 15 minute, we can actually see we are in a 15-minute inverse fair value gap back in OTE of this price leg. We just tapped OTE to the tick, and we are expecting to see displacement through these highs to go run up towards buy side. So we're aligning the external bias with the internal bias. And now, a word from our sponsor. Now, if I had to guess, this probably isn't the first strategy video of mine that you've watched. You've probably binged some of my other ICT-related content. But if you've done all that and you still know that you're not living up to your potential as a trader, I can help you. You have everything you need to succeed right now except implementation. I'm talking about actually applying the concepts that you've learned and having somebody to hold you accountable through that process. That's what my mentorship is all about. Holding your hand and making it literally impossible for you to fail over a long enough time frame. So if you're not happy with your current result, you know who you are. Go click the link in the description, take a look, see if it's for you. Let's get back to the video. So now when we zoom back in, the initial entry could be here, or you can wait for the exact same thing. Back inside the breaker, stop raid, lower low, higher high, pull back into the breaker, this up close candle right here, up close, then down close candle. We also have a fair value gap is here, acting as a unicorn. What do you think is probably going to happen? This is when we expect to see a move towards buy side. You can see we get a beautiful push higher, and there we go. Buy side has now been taken. Now, what I want you to recognize with this when it comes to fractability as well, I know we're talking a lot about breakers, but there's a reason we're talking a lot about breakers in a breaker video, is because breakers only work when you can apply all of these other things to it, right? Breakers are there for a reason. It is a good entry model, but unless you have context, a breaker does not mean anything. A breaker will fail on you, and you will question, why did this breaker not work? It's because you didn't have context that's in place to actually give you a reason why it should be holding, or why we should displace to the upside, or why we should displace to the downside, right? Another thing I want you to notice is this is buy side of the curve as well, right? This is a model inside of a model, right? You have sell side of the curve, you have buy side of the curve. This is a buy model inside of a buy model, right? This is fractability in price action. What do you mean by fractability, Justin? Fractability meaning infinite number of complex patterns that overlap. For example, if we're looking at a square, right? If I was to draw just a square here, I could tell you that there's 4 squares in this square, right? There's 1, 2, 3, 4, right? There's 4 squares that make up in this square, but they're the exact same square, right? A square is a square, but there's 4 in this square. And guess what? There's 4 more in this square. And guess what? There's 4 more in this square. This is the market. This is the market. The market is completely fractal. It is models inside of models inside of models. And if you ever wondered, people don't understand what ICT's logo is. If we were to pull up ICT logo, what is this? It is a fractal pattern. It is the exact same pattern inside it, inside again, zoomed in, zoomed in, zoomed in, zoomed in, because it is completely fractal. The market is completely fractal, right? So how do we use that knowledge to our advantage? It's understanding that when you align the external bias with the internal bias, you can get efficient price action, and you can get pretty much infinite opportunity, because there's always going to be a trade to take if you know what a time frame is going to do. If you know what the 5 minute is going to do, zoom down to the 1 minute and understand how to take an entry. If you know what the 4 hour or the 1 hour is going to do, go down to a 30 minute, go down to a 15 minute, a 5 minute, and look for the same thing, right? It's aligning these two things. For example, if I was to show you this chart right now, and I was to say, hey, this is a 1 hour, right? Because right now we're looking at a 1 minute chart. If I was to tell you this was a 1 hour, we would literally do the exact same thing. I would go down into a 30 minute, right? I would go down, or not in a 30 minute, I would go down probably to a 5 minute. And let's say this case, a 15 second. Oh, I don't think we have the data to support it, but that is when I would go down and I would zoom in and I would look for an entry using the bigger time frame bias, right? We find the bias, whatever on that time frame is, and we zoom in and we look for a trade, right? So I know we covered a lot just in this one little trade, but it is extremely important to know a breaker doesn't matter unless you have context, right? And we know the context of this trade. Buy side resting above us. Sell side has been taken in an area in which we expect to reject. We have a breaker formed, and we have another breaker formed in the exact same model, right? Sparking the move towards the upside, right? So let's look at some more examples. So now going back to this initial model that we drew, there's something that we now want to add to this, because this is a breaker in itself, but what most people don't show you in the actual way that you should be using it, right? Because this itself doesn't really do anything for you. You're going to go into the market and you're going to look for this pattern and you're going to take entries right here long, and then this is going to go straight down and you're going to get ran through and you're going to be, why did that, what happened, right? So I'm going to actually do you a favor here. This is how you should be looking for it. Now we have proper context as to why this breaker should hold. Why should this breaker hold? What did we add? We added sell side and buy side liquidity. Sell side, as you can see, has now been taken. We had some form of sell side liquidity that has now been taken. Now we get displacement to the upside. Now we have a breaker, and important that there is buy side resting above. There is a reason for price to go higher, right? And one thing I want you guys to know is there's 4 reasons why markets move. And every trade that you take should be a reason for one of these, right? So what are the 4 reasons? Number 1, the markets move to hunt liquidity. Number 2, markets move to rebalance to inefficiencies. Number 3, markets rebalance to equilibrium. And number 4, markets generate liquidity. Every second of the day, we are doing one of these 4 things, okay? So when you take a trade, every bias or reason for you to be taking that trade should be aligned with one of those reasons. For example, if I am taking a long in this breaker, I should be targeting either some sort of area of liquidity, some sort of imbalance, right? Because markets hunt liquidity, markets rebalance inefficiencies, I could be targeting equilibrium of the previous price leg, right? And to take this even one step further, to even add more context, right? We're going to start developing an A+ strategy here, right? What is the more conviction that I can continue to add on to this that is going to make this an even better trade? Let's keep adding. So the next thing added, bigger time frame fair value gap. Let's say there's sell side here, right? Some sort of sell side liquidity has now been taken, but we're also in a bigger time frame fair value gap, right? So there's more of a reason why we should bounce here and why we should go to the upside. Because on a bigger time frame, we're now in an area in which we expect to reject, and we just took some form of sell side liquidity. So we expect the market to most likely go higher here now, right? So we're continuing to add conviction here. What is even more that we can look for and to give us more conviction or more confidence that this right here in this breaker is going to hold bullish and we will go higher? We have now added another thing. There is now an SMT. What is an SMT? I'm going to link another video, right? All of these things are starting to come together, right? It's putting the pieces. How can you have the most high confidence trade or high confidence reason to take a trade, right? Trading is not about, learning a breaker, learning a fair value gap. Oh, there's an order block. Oh, there's a fair, all of these concepts don't mean anything if it's by themselves. When you align them and you can start building conviction as to why the market actually moves, and then being an observer and simply letting it come to you and saying, hey, there's an SMT that just formed. Hey, we just had displacement to the upside. Hey, this just happened. Instead of actively looking for it, because you're going to actively look for it and you're going to say, hey, I think we just put in a low. I think we're bullish right now. And then you're going to take unnecessary trades and unnecessary losses when the market really hasn't shown you anything. Watch. This will form. This might not form as often as you want it to, but it will. And these are the high confidence setups that you can take as you continue to add conviction and reasoning as to why the market should, right? There's a reason we trade ICT concepts. This is not some astrological This isn't some astrology type bullshit where the stars are aligning and we're finally seeing it. This is showing us a reason for the price to actually move. And the algorithm runs this market. When we see a crack in correlation in the assets, there's a reason for markets to move. When we see sell side taken, there's a buy side resting above us. There's a reason for markets to move, right? All of these things show us and give us confidence that the more that we see them, right? All right, let's add another one. 950 macro. Now I know I'm gonna complicate this video. I'm sorry for the people that just wanted to come and learn about a breaker block, but I'm gonna give you as much value as I can in such a short amount of time. 950 macro. If you don't know what a macro is, I highly recommend going and searching it up. I don't think I have a macro video. Maybe I plan on making one on YouTube. We talk a lot about it in our private group. So adding another piece of conviction, 950 macro. I don't think I have a video on macros yet on my YouTube. I might end up doing it. I might not. I do have a video on macros in my mentorship, and we talk a lot about them. But this is an area in which when 950 macro opens up, this is adding more conviction, right? Because this is in time in which we expect the algorithm to hunt liquidity, to move, to reverse, all of these things, right? So this is another form of conviction. So now we've kind of added a lot of things, but I just wanted to do this to show you guys and give you guys an idea as to what this actually looks like, right? Building conviction, actually taking the setup. Me just showing you what a breaker is doesn't really do much, right? How am I actually going to implement it? How am I actually going to trade it? It's about recognizing, is there a reason for price to go higher? Is there buy side? Is there an imbalance? Is there a reason for us to bounce? Is there an SMT? Are we in a bigger time frame for value gap? Did sell side get taken, right? All of these things are more important than the breaker. The breaker is the least important thing in this entire equation, right? All of these other things come first, and that is what the people don't teach you, and that is why people set you up for failure. The breaker comes last. Everything else becomes first because the breaker simply is just the entry model. There's got to be a reason for it to actually work. And if there's no reason, it's not going to. So let's jump in and let's look at some more examples. All right, looking at another example, looking at NQ, right? But this time we're actually going to talk about the confluences, the reason why this works, right? Number one, notice we're looking at this high, right? I want you to just recognize, are we looking for a bearish breaker or a bullish breaker? We're looking for a bearish breaker on a smaller time frame because this is our buy side and this is when we want to zoom in. Once this gets taken, notice bigger time frame imbalance here on the 5-minute, as well as all of this generated sell side liquidity here, low here, relative equal lows down here. This is where we want to see buy side get taken, rejection of the imbalance, possible SMT, and then look to see a breaker form, right? So we let the market do its thing. And here is when we add more context. On ES, we took this high to the left of us. So now we have even more added conviction. Draw on liquidity is lower, number one. Rejection of a bigger time frame imbalance, number two. Number three, buy side swept. Number four, is that four? Yeah. We're starting to get displacement to the downside. So what's the breaker we're looking at here? Well, low or high, low, higher high, lower high. Let's mark this in. First high gets put in, first low, higher high, and then we start displacing to the downside and putting in a lower low. Now this becomes our breaker. This down closed candle, market now pulls back. Again, also, what else is here? A fair value gap. We respect both of these is what we're expecting. Market comes up, taps the breaker, as well as continuing to respect this fair value gap. This is when you can look to take a short in this breaker, put your stop at whatever the recent imbalance is, or you can put it up higher. It is up to you. What would you be targeting? Your first target would be sell side liquidity, and you would let your runner go to the next area of liquidity and then the next area of liquidity, because all of this is generated sell side liquidity in which we expect to get taken. Market rejects, starts to sell all the way off, and ends up running all the way to sell side. But again, the context as to why this works, the context as to why we dump here. It is not just, oh, Justin, you chose these examples, just to show it works, but you can't actually do it live. There's a reason why I chose the examples I am showing you, because these are real high quality setups. It is not just, oh, they worked out because it's lucky, right? They worked out because they should have worked out. There's a reason for them to work out. The reason is the bigger time frame draw on liquidity is bearish. Order flow is bearish. When we zoom out here and we add even more context to this, we do a complete top-down analysis. 1 hour. Our 1 hour draw on liquidity is bearish. Why is our 1 hour draw on liquidity bearish? Because we're in a massive 1 hour fair value gap. There is a big SMT on the bigger time frame. There's a Kraken correlation between the indices. So our bigger time frame is bearish, right? And we're in an area in which we expect to reject, being this 1 hour fair value gap. So we zoom in once again. What has happened? We created relative equal lows acting as sell side liquidity, which we expect to get taken. If I am looking to see sell side get taken, I want to zoom in and I want to look for a manipulation in the opposite direction of the draw on liquidity, being buy side. High gets put in, pull back. What do we respect? Consequent encroachment of this wick. If I was to draw this in, this big wick, a lot of the times when we have a big wick like this, we will pull back and respect consequent encroachment. Consequent encroachment is the midpoint of this wick. We come down, we respect it, we move higher, we go take buy side, run all of the buy stops that we're looking to be short, targeting lower, stopping them out all before the actual move. Then we zoom in even more. There's now an SMT on the bigger time frame, right? This high gets taken on ES, not on NQ. And there's a bigger time frame for value gap here. 5 minute for value gap, we also reject. So now we then zoom in, high, low, higher high, lower low, pull back to the breaker block, short, target liquidity. There's a reason for it. And if you want to throw in possible standard deviation projection, I'll leave a link somewhere on the screen for standard deviation. You can also see standard deviation lines up to the tick as to where we expect price to go, which is sell side liquidity. So coincidence, up to you to decide, honestly. The more that I personally feel like it's blasphemy, literally. If once you see it happen enough, go in your chart. I challenge you, go in your chart and look for this to happen live. Because again, the concepts don't matter unless you have implementation, right? And so many people struggle with breaker blocks, with liquidity, with psychology, all of these things. I can make as much videos as I want, but unless you actually have somebody to go to and watch and ask questions and actually practice and look at the implementation of these ideas and of these concepts, because 95% of the people on social media and on YouTube and everything you watch have no fucking clue what they're talking about. They can't actually back up what they do. They can't practice what they preach. They don't practice good risk management. They don't practice the actual trades that they take. That is a problem. So if you are still struggling, right? If you are still struggling and you can't seem to understand, or you understand the concepts, but you're still losing, or you're in your break-even phase, whatever it is, I highly, highly recommend letting me help you. Let me help you. I do this for a reason. I love seeing you guys finally fucking put the pieces together and seeing the light bulbs go off, and I'm hoping something in this video did it for you. But seeing that growth is what builds me satisfaction. So I'm going to leave a link in the description if you guys have been looking for someone that you can trust, that you can go to with your problems, who's going to tell you what you need to fucking hear. I'm not going to sugarcoat anything. Someone that you need to hear. I'm going to leave a link in the description to my mentorship. This mentorship is meant for people who want to actually learn the right way to trade. Not someone who's going to slack the fuck off and think that it's just going to be handed to them, because it still is going to take a lot of work. But you're going to have access to 60 plus videos of everything I know, daily charting sessions, daily live trading sessions where you're going to be able to actually watch me trade live. And you're going to be able to actually ask questions about your trading, your specific trading. What are you doing wrong? Saying, Justin, hey, I took this trade on Friday. I got stopped out. I think I did this right. I think I did this wrong. Whatever it is, what do you think? And I can show you and I can give you feedback, and you can come on the call with everybody. And it's an amazing community where we all come together and we figure out what the problems are and we help each other. And it is a blessing. If you enjoyed this video, I think you'll also like one of my other ICT breakdown videos where I cover turtle soup. You guys requested this one for months, and it also is a really misunderstood concept. I'm going to link it somewhere around here. Now, I've got plenty more of these on the way, so make sure you're subscribed. Thank you guys for your support, and I'll see you in the next one.